So one of the more interesting companies on my radar anyway that went public in the 2000 or 2020 to 2021 IPO boom was Airbnb. Um, this was one of the most successful IPOs of the time. I remember it very well. The stock opened at something like twice its IPO price. A lot of people said that was Airbnb adding in its booking fee and making jokes like that. But it opened at a very high price, premium to its IPO price, and it kind of crashed when with the rest of the you know that IPO class a couple years later. So we're going to talk about that. Before we get into it, please take a minute and check out the link you see on your screen for a message from my sponsor, The Motley Fool. You can get the top 10 stocks to buy right now, and it's the best way to support this work that Tyler and I are doing on YouTube. So we recently got the fourth quarter results from Airbnb, and it's it would be an understatement to say that this is a successful business. I don't remember any other company in any other industry that has completely transformed how an industry works to the extent that Airbnb has in such a relatively short period of time. Airbnb has only been around for about 15 years, if I'm remembering the dates correctly. It went from a couple of air mattresses on somebody's floor, which is where the name came from, to almost 100 million nights booked on the platform, with $15.5 billion of booking value in the fourth quarter alone. Now, that booking value is up 15% year over year, so it's still growing. Revenue was up 17%. They get a nice percentage from the bookings on their platform. I have an Airbnb listing on the platform through a a manager that I've hired. Um, that's those 5 million hosts. It's not all, homeowners. A lot of property managers list there because you really can't afford not to. About 80% of the bookings on my property come from Airbnb, even though it's listed on VRBO, HomeAway, all the other ones. Airbnb is a completely essential part of the vacation rental world, and we're seeing that in the numbers. 5 million hosts on the platform, 7.7 million total listings on the platform. The margins are fantastic. It is a consistently profitable business now. A lot of people don't realize that. They assume because it's a big tech company and it's growing that it's got to be unprofitable. A lot of people are still in that mindset from a few years ago. But it's looking really, really good. Tyler brought this back onto my radar because I had admittedly not been following their results as closely as I should have. And it really looks great. And there are some really interesting points that Tyler's going to talk about that he noticed in their report.
Yeah. What's fascinating to me is you were mentioning like the idea of how it's, you have to be on Airbnb because, if you only were on one of the other sites or everyone but Airbnb, what would your business be down in terms of your vacation rental? Like 50, 60, 70%? What do you think?
Yeah,
Yeah.
at least, at least. Or you'd
It's
have to cut
this,
your rates to get business elsewhere.
yeah, and it's almost become like this virtuous cycle, right? Where people go to Airbnb because it has the most hosts, it has the most diversity of offerings, it has a relatively, I would say, one of the more user-friendly experiences in terms of, trying to actually do a booking versus, some of the other websites that are out available. So when you're bringing in all the customers and they know the app, they know all this other stuff, and Airbnb has even become a verb when it comes to looking for places versus you know renting a hotel or whatever you want to say. When that has become so ubiquitous, you end up bringing in all the hosts because all the hosts want to go where the customers are, and you've just kind of created this virtuous cycle where they're all going to come together in the same place. Yeah, sure. As a owner, you probably have to list everywhere, but in terms of the bulk of what your actual business is going to do, it's going to be coming from Airbnb. And once you've reached that kind of point of saturation, or that, you know, call it flywheel, virtuous cycle, whatever you want to call it, it's so much harder to disrupt in any significant way. I mean, we could talk about like kind of the ubiquity of Amazon in that way of like, sure, there's a lot of people that have been trying to do that. I mean, I think if you remember the early mid 2000s, you remember overstock.com, and everyone thought, oh yeah, overstock, they're going to figure it out and they can, take market share. And they kind of got thrown to the side, and the ubiquity of certain things starts to just develop its own momentum. And Airbnb, it appears, has really started to develop that. And As Matt alluded to, some of the things in its business have just become so lucrative and profitable that it's hard to ignore anymore. A lot of tech-enabled companies, you go, yeah, but can they keep it going? And sometimes their profitability is like, well, if on an adjusted EBITDA pro forma basis where they've made 15 adjustments to something to exclude every sort of operating cost they actually have to look profitable, Airbnb is just, now it's a net profit, earnings per share, free cash flow generating business, which for a lot of these hyper growth businesses that are tech enabled, it's a rarity. And like you said, with that network effect, it's going to be hard to disrupt. It doesn't require the constant advertising and as much because it is so much front of mind share. What is interesting to me in this most recent quarter, and I kind of threw this out as a silly idea to Matt, was like, do they have to actually bring in insurance investors to Airbnb? As of right now, there's about $16 billion in cash, short-term investments, and then funds that they are holding in escrow for its customers, the hosts who, where the people wanting to stay there have already prepaid, but they don't actually pay out until, that person steps in the door. And when you have that, $5.9 billion of that, yeah, it's pretty short term, but that's it. As long as the business is on this virtuous cycle, you're going to have a very large, just kind of amount of cash just sitting as almost like an insurance float sitting in this business. And I'm starting to curiously wonder, like, if we're going to get to a point where you're going to see like an Airbnb chief investment officer that's responsible for kind of investing the float that they have in this business with its just kind of cash sitting on the books. It's an interesting concept that I don't know if it's going to get any traction, but something I'd like to see happen in the coming weeks, or maybe a couple of years, I guess would be a better timeline. And so, with that much cash, with the profitability, and management is showing a kind of an affinity to not just investing in the business, which is good, like improving the experience, trying to make Airbnb in its current experience better, expanding internationally. It's still able to do so and still have extra cash, which it is now buying back shares and returning value to shareholders, which in many ways is a rarity in so many other of these businesses these days. In the most recent shareholder letter, they noted, yeah, we have pretty considerable stock-based compensation, and they even mentioned part of that was because of the some restricted stock unit grants that they had during the IPO, and those rate its stock-based compensation rates should start to decline a little bit more with kind of headcount growth in the coming years because those tranches of stock options from the IPO are gone. But even with its, I would say, rather generous stock compensation program, it's still buying back shares and reducing its share count. And with that sort of situation holding, those things all kind of point to me as a very, very hard to penetrate business moat, a very profitable business that is finding a way to actually return value to shareholders rather than just simply empire build and build like 7 different experiences on top of the Airbnb app and hopefully grab some incremental growth. They don't need to. They can grow value of it for your shareholders just by simply buying back stock. And who knows? I would not be shocked if in the next year or two we start talking about a dividend at Airbnb. So all of these things to me just kind of point to, I think, a business that for what it's priced at 20 times earnings and what I just kind of espoused it relative to what you can get at other business in other kind of tech enabled platforms, I haven't really found something similar to this. And it makes me wonder why more people aren't interested in this as a company.
Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.